Welcome to the Texas Oil and Gas Podcast, the show dedicated to bring you the news from the oil patch deep in the heart of Texas, with your hosts, Ryan Ray and Josh Shelton.
And we're back with the Texas Oil and Gas Podcast. This is episode 140. 140. I'm your host, Josh Shelton, friend and co-host Ryan Ray. Ryan, this is Polar Plunge Week, man. Our guests, our listeners are going to be listening to this tomorrow, Tuesday. It's when the show comes out. 3 days later, we're going to be freezing our toes off in Lake Granbury.
Welcome to another edition of the Energy Week Podcast.
Yeah, it's a bad way to start off a Monday thinking about that. It's you people asked for it. You've gotten it.
Hey, everything is fantastic.
What started out as a way to get Nate in the lake has
because the news
evolved into a monster of
seems
itself.
doom and gloom.
There we go.
The
I'm sure
world's
we got to get our
coming to the end.
GoPros
We're all
around
die
here
of
and
the
drone and all that. We'll put a video on
whatever
our
the proper name is.
LinkedIn page
I
and
can't
social
say
media,
it,
I'm
so,
sure. But
Can we live stream this?
Yeah.
Actually, I'm not sure that we
in
can.
stock
But
So
we probably could, but if I decide to drown you in Lake Granbury, I don't want the evidence to be there. So
I just remembered that I just got a smartphone gimbal, so we can totally live stream this from my phone.
we won't be live streaming. I'm telling you. We might.
Okay, we
Follow
want
on.
to cut out the episode where Ryan ducks me in the lake an extra time for my very stable genius of getting everyone to give us reviews.
Yeah. Okay. Well, follow us on LinkedIn, and you'll figure out if we're going to live stream. We will record some video though, and post it as a testimony to the kind of guys that we are. We follow through on our word.
This is like
neck deep in Lake Granbury. It's coming up here just in just a few days. So
I don't know about that.
luckily, global warming is set in. It's 50,
actually,
I think.
I don't actually watch the
55,
news.
something like that
that's
for Friday. So thank
I
you,
read
Climate
the news,
Change, Greta
check the headlines, I read the
Thunberg,
stories,
and Al
but I
Gore.
don't
We
actually
appreciate
watch
that.
the news because this is kind
and
of
if you could go ahead and turn that temperature up to 70 by Friday, that would be even better.
The fever that you get is oh my gosh, the world's going to end.
Gas for us.
Yeah, get the emissions going.
CO2.
A lot of emissions.
I told him, I said, I think.
Well, Ryan, before we jump in, do we have any announcements this week? I don't think we have any other reviews. It seems like they got us.
Oh yeah, it's funny. The reviews have just stopped. Yeah,
Dried up.
Yeah. Funny those 5-star reviews have dried up. Just like that. Same quality content. Wow, it's that's depressing at another level. But yeah, no more 5-star reviews talking about how great we are. Or
We gotta give the listeners credit though. They're just waiting with bated breath to see how good the polar plunge is, and then if we give them a good show, they'll give us more 5-star reviews.
It's very unlikely you'll get it, but it's really
what if we don't survive?
That's going to be the thing, man. Where's the news going to come from? How are you going to know what's going on in the industry if we freeze to death?
I'm not planning to go.
If you don't want us to do it, then let's get to 300 reviews by Friday. There we go. If you want to keep me and Josh, not Nate, Nate's going in. If you want to keep Josh and Ryan out of the lake, 300 5-stars by Friday, then we'll stay dry. That seems fair. Because maybe people didn't mean for me and you to get in, Josh. Maybe they didn't mean for that. They meant for Nate, and they just all voted because they're so excited that they didn't realize it. So 300 by Friday, I think that'd be enough, huh?
Do you see what I have to deal with, listeners?
We should freeze the assets and get some bots.
Somebody's assets going to be frozen this weekend.
All right, so our good friend David Blackman, actually, come to think of it, we hadn't had him on in a little while. He wrote an article for Forbes this morning, Oil and Gas Situations, Abundance and Growth Meet Limitations. And he talks a little bit about ExxonMobil refined the first cargo of oil from Guyana, and I got another article for that here in just a second. But Blackman looks at a couple of items, including that, to kind of give you an overview of what the state of oil is, or oil and gas rather, in the U.S. And because of the situation that the industry's in, there's going to be much less funding moving forward. And Blackman doesn't see this as a short-term deal. He sees this as for years to come. Even if oil prices were to go up, it seems that
hopefully everyone that does have it comes out clear. But it does seem
amount of money and capital that's going to be invested is going to be much more leery.
Are they? This is
moving
Ryan
forward
puts on his
because
tinfoil hat.
of the situation they found themselves
the markets
in now.
need something to react to.
Obviously connected
Let's
to
take it with
commodity
this.
prices, but it seems that there's been a lesson learned that is going to create a little bit of hesitancy moving forward.
I think it's
the first thing I thought of, and I took a look at the Guyana articles. I thought that was all offshore production, which maybe I misread the headlines last year, but I thought they just found it. So I wonder if it's shallow or what the deal is, because I was surprised that they were already getting that to market, because those are usually longer lead projects. So I need to go back and look at some of that. I know we have another piece about it in a minute, but a couple things that stuck out to me about this, Josh, was first off, New Mexico, our great friends in New Mexico, went from $2.2 billion in 2018 to over $3.1 billion in revenue from New Mexico, according to the Mexico Oil and Gas Association, and that is from oil and gas production related revenue. And so, when we see these headlines coming from the state of Mexico, this is a nice way to send it over to them. Say, hey guys, maybe you don't need an extra $1 billion, but it's nice. It's nice to have an extra $1 billion just come into your lap. So, that's an important thing. And as industry folks, we should always tout when we are helping wealth be created, because obviously that's how we live, is about being wealthy. And we're, compared to people in human history, we're the wealthiest people in the world in human history. So there's that. The other thing I thought was interesting was, if you kind of sit back and you look at some of the things he puts here, there's 3 little points he summarizes. Henry Hub, this is from Blackman's quote, Henry Hub price fell for natural gas below the crucial $2 level in January 17 and has remained there since. Prices this low could put producers with gas-heavy portfolios in a critical financial condition. That's an interesting thing to think about, because one of the things that we have to balance when we talk about oil and gas is the Permian produces so much natural gas that it puts this pressure on these natural gas producers that's not really, so if you're over in the Marcellus and you're producing, or Haynesville or the Barnett, RIP, part of the reason that you're struggling with prices is because of the oil production. So as oil production theoretically drops this year, natural gas production will drop from what's going on in the Permian. How does that impact prices? And I think that's kind of the thing to watch. And then on the flip side, if you believe some of the narratives that it's going to go to 70 really quick, or maybe some of the crazier narratives that's going to go to 90, that would seem to really hurt the natural gas producers as well, as it would keep the price down, because you would increase the amount of natural gas coming out of the Permian. So falling below $2 level is obviously not very good. And the other thing is, he said, this is according to reported by Reuters, the U.S. Energy Information Administration expects the growth in February for shale oil and natural gas output to be the slowest in over a year.
Let's see here.
What does that mean when you start thinking about it? Well, we talk about the rig counts dropping. We talk about the DUCs coming online. So if you're sitting there saying that the growth is going to slow down, I'm assuming that's talking about production growth, right? So if production growth begins to slow, then does that mean that we've already hit the kind of over the hump with the DUCs and stuff like that? Is that, February would be kind of an early time marker to hit that, it would seem.
Honest, 700 people dying in the grand
scheme. Yeah, that's going to be something to see.
Really not that many people.
The DUCs has been a fascinating topic for us. I really would like to follow up on that.
When do we have? Don't we have Ted Hall come back on?
Yeah, we have Ted Hall coming back on next month.
Whatever
with us about the DUCs.
Okay, so this will be interesting, because this is talking about February. So next month we can get Ted on to hear where he's thinking that we're out. But so the growth is going to be the slowest for over a year. Doesn't mean it's going to necessarily decline year over year, but the growth is going to slow down. So where does that put us at in this narrative of rigs falling, DUCs coming online, production slowing down? So that's going to be interesting to watch, because if it does start to, if production, and I don't think production is going to fall in February, but if production does start to fall in February, then that obviously would impact all of these things. So it's an interesting time, and I know we're talking about OPEC here in a minute, but you kind of look at it, and it feels like the market isn't really sure where things are going to go. And if you look at the outbreak with the virus in China, and I saw a thing this morning, the markets are tumbling on fear of the virus. Usually it feels like the market overreacts to things that it's scared of. And so I would say right now, when you see the market reacting to the potential pandemic of the virus, spreading across the world and killing less people, that seems to be, it's in financial advice, but if I was going to buy the stock market, now's the time to buy, because you feel like you're going to get that nice little dip and then come back up here in a week or two and everything levels out. So I'm more interested in the fundamentals than I am the potential downfall because of a potential actual pandemic that doesn't seem to be as wide, going to be as widespread as
if I'm reading that right,
they were talking about at least as early as Friday.
So this is a really interesting.
You're mentioning OPEC. There's an article at oilprice.com that mentions that OPEC is mulling the extension of oil production cuts through the end of 2020. So right now we were expecting the cuts to last until March and then maybe to the middle of the year. So there are talks that they may actually extend those cuts all the way to the end of 2020. I think if that were to happen, we would have, I think, a good reason to believe that oil prices would increase.
They really should also put like
when I say significant, that's kind of relative, but I think they would go up third, fourth quarter this year. We should expect
but like I'm assuming like cholera was not
much stronger prices. So that would be good news for us, I think.
Well, what's interesting is Anas a few weeks ago, or whenever he came on, 2 or 3 weeks ago, whatever it was, he seemed to indicate that he felt like the Saudis would be interested in helping keeping Trump in, not because it's Trump, just because they like keep the Republicans in. So that would mean that they would keep production higher to keep prices lower, which is kind of the antithesis of what this article seems to be saying.
Right.
And so,
gas prices, you mean?
No, for oil prices.
Well, if they keep the prices lower, that lowers the gas prices. Is that the angle?
No. So the point would be is that OPEC, if OPEC cuts production or continues to cut production, and the U.S. shale producers cut oil production, then eventually the oil prices would go up, which would make gasoline prices and things like that eventually climb. He was saying that historically speaking, the Saudis have wanted to keep the Republican president in because that's good for their business. So if you look at where prices need to be, or if they're at $80 a barrel, it's good for guys like me and you and folks on this podcast. But for the average consumer, they're looking at their gasoline going, oh my gosh, my gasoline prices is high.
Just to clarify,
so if I understood what Nas was saying is that the Saudis are incentivized to make sure that the prices stay kind of where they are, because he said they're going to stay kind of where they were a few weeks ago, 55 to 60 kind of range. So this article is saying, hey, they're talking about extended cuts through the end of 2020, and I think that's going to be if Nas' theory is right, it's going to be dependent on where the price is as we come closer to the election. Now, if it looks like Trump's going to win a landslide, maybe that they don't do anything, but if you kind of think about the implications of what he's saying, if you get to June and the polls are really close, it looks like
we announced it in 2002.
The Democrats, whoever the Democrat candidate is, will have a shot of overtaking Trump. Then the Saudis might be incentivized to keep raise production or keep production at current levels, or whatever it might be, to ensure that the gasoline prices, which comes from oil, obviously, don't get out of hand, to make sure that the economy stays quote unquote in check and helps ensure a Trump second term. No, Speaker won't like that. Speaker won't like that at all.
No, Speaker, Prophet of Doom, he will not appreciate that.
I'm expecting those Speaker texts. I haven't got one from him in a while. I talked to him, I think, once this year, but I'm expecting the Speaker Prophet of Doom. This is my prophet. My prophecy was about Speaker. As the primary season comes in full swing, the Speaker text to get more and more colorful in their prophecy. So Speaker, we love you. Look forward to hearing from you soon.
Especially if Warren gets in with her fracking ban.
Yeah, Speaker, well, I don't know what you're going to do. And hey, real quick, I'll send this to Nate. We put in the show notes. There was a great podcast from the New York Times the other day that was in Western Pennsylvania asking folks about who they'd vote for on the Democrat side.
And there's really a couple ways
the drilling ban and stuff like that we talked about. You can kind of hear from their perspective. These are folks who typically vote Democrat, how they're torn about voting for Elizabeth Warren or Bernie and the other candidates because of some of that talk. So there are folks, here in Texas, we kind of go, that'd be the stupidest thing I've ever heard of, but for those folks, it actually has,
a short
real economic impact that the coal jobs are gone, and now they got natural gas drilling jobs. And if those jobs go away, what do they do? So it was interesting. So I'll send it to Nate.
You're just going to double buy your groceries. You're not going to make the 3 to 4 trips. Probably. So
I think everybody is familiar with some of the fires going on in Australia.
Major
I forget how many
economic things like
it was pretty
construction
and
stuff like that you're going to look at. If those projects get shut down and they are on a hard deadline,
but there was an article that came out earlier this year, January the 6th,
work overtime to make up for that, or they'll extend the deadline. But either way, that
world's top LNG exporter. Chevron is one
I'm not entirely sure that
one of the big reasons for that. They have an LNG plant that they have that they have in Australia.
Some of it's lost,
and they gave actually some money
to
bring some relief to some of these fires.
This very specific case of China,
and interesting enough, Ryan, there was
and so I think that there probably were expecting
a lot of outrage that Chevron would give money because in the minds of a lot of the environmentalists, Chevron is the main cause behind some of these fires. So I was at a deal last week, and something was mentioned that the guy called ESG, which is environmental social governance, and in a lot of these investments, ESG is basically the optics that these companies have, and so from the environmental standpoint, a lot of these companies are mindful of how they're going to be treated in the stock market or in the public based on how they position themselves toward environmental issues. So it's just interesting to see that a company like Chevron, who's giving money to
have a huge
help with these forest fires, and who is providing energy to these countries where there's high levels of poverty, and they're
two things. One, let's put this on the record, Nate. Unless there's some major cataclysmic event, I'm predicting by February 10th, this is all back to normal. So unless there's something else that happens between now and February 10th, we can quote me on that. I'll make a prediction.
It's going to be interesting to see.
February 10th, we're all back. Right. The market's back. So let's just explode.
I know we have folks that listen to us in Australia would love to hear.
The other thing is,
how bad. I'd say I'd love to hear how bad it is. Just obviously,
is anyone shutting
I'm curious to hear how bad it is, because obviously, as you know, when you watch the news, you can only get a snapshot. So what do we think some of the potential impacts long term? And I heard some folks the other day talking about their fields might be impacted.
All of that happens, and I feel like the oil
and
and gas market
then it's a little bit kind of one of those things. What do you
on a day-to-day basis?
What do you do? Let's say that you were
you can downgrade the price.
I heard someone say this one time, Josh.
How much?
Let's say that you were
impacted overall by this?
A kingpin drug dealer. Okay, and you made billions of dollars as a kingpin drug dealer, and then you quit that business and you became on the straight and narrow, right? You're opening up a baseball card shop, or I don't know, gas station, or whatever. Insert regular business here. If you then take that $1 billion and you start funding orphanages and hospitals and charity events, are you doing the right thing or not? And because you're using the drug money essentially to fund these humanitarian efforts. And so this isn't a one-to-one, but it is raising an interesting question. It's like, well, okay, if you do believe that Chevron is somewhat responsible for these fires, and they are giving money to help mitigate the costs and get people back on their feet, you're saying, well, what else? What do you want to do with the money? That's kind of a hard spot for someone to be in.
Yeah. Last thing there on some of the ESG. There's the biggest investor in the world. I don't know if that's the right term. It's a company called BlackRock. They own. They have ownership in Pioneer, Marathon, and many other companies. They are pushing for a reduction in the carbon footprint as a response to this ESG.
And we'll link to those articles in the show, so if you're curious about the
question, is what does that mean exactly? But just seeing some of the environmental pushes being made by some of these
to head off impact of China virus
publicly traded companies is
our favorite source.
It's going to be something to watch.
That's what you should get your dog named. Source. Get a dog named Source.
More of these companies are moving over here to the Permian.
My real desire is that I can always
being drawn from the environmental group, the more it's going to affect us and how much we have to deal with it.
So Ellen, OPEC comes out and says, you know what? We're going to extend these cuts maybe through the end of the year. And this goes back to
all these companies moving here, all the attention coming here. We're going to see some of these sentiments start to affect how we do business moving forward.
And you want to kind of correct what you think is an overcorrection by the market. You just come out and release this. The markets go, okay,
in terms of investments.
Okay, OPEC's not going to do anything. We feel good. And then OPEC could come back in March.
A couple of things, Ryan, for the Texas Roundup before our guest comes on. I'm not saying they're going to do it or not do it. There's a lot of things. A couple of things. London Petroleum aims to become carbon neutral by 2030. This is kind of fitting in that same narrative.
It could mean something, but it doesn't.
It could,
Shell
but it doesn't. And I think that
planning to be carbon neutral by 2050, being basically a completely renewable
because
company.
China's going to put in their orders for oil from Aramco, and they're going to see if
out there.
If China puts
ExxonMobil grows Guyana oil find estimates to more than 8 BOE. So this company said on January 27th that they made the 16th discovery on the block, hitting about 29 meters of high-quality oil-bearing sandstone reservoir. So man, this is like a gold mine down there, man. It's unbelievable. Exxon's just finding stuff left and right. So this is going to be something to watch. The prices of oil and in general
maybe the best thing that OPEC
the state
could
of
do
offshore
would
is
be to tell China to ban
seeming to be from a long-term
standpoint
standpoint to be in a good place.
Than them saying
Guyana finalizes move to U.S. as OVentive. They completed a series of reorganization transactions on January 24th that, among other things, establishes its corporate domicile in the U.S. under a new moniker.
Dear China, we'll be suspending our oil sales to you until bat soup and other coronavirus-causing delicacies
I don't know how long it will take for that to take place.
We prefer you not to actively kill off
I think
oil demand
drilling
more
info
than it
became
already
embarrassed.
is. Thank you for considering our
It took a while
request.
for that to actually stick.
Right, but you also got to remember that they're publicly traded, so you're going to have some stock exchange stuff that's going to go on, and issues like that. They'll be tied up into it. So it might. Drilling info and Embarrassed, whatever they are, they're privately held, so it's a little bit. You do have legal issues you have to deal with, but it's a little bit different than when you're publicly traded. Just kind of the notifications and
now, one of the things that came up on the Texas
and all the stuff involved with that.
Weeks ago was ANOS came
Annova LNG and Enbridge Inc. pipeline agreement. So Annova signed a precedent agreement with Valley Crossing Pipeline on January 22nd, providing transportation for Annova's LNG natural gas requirements at its 6.5 MTPA LNG facility in Brownsville, Texas.
So if you kind of
and Josh, we have our sales tip. We've going through. We've got a couple more. I think 4 or 5 more. So we'll link to this in the show notes. It's textiloilgaspodcast.com/sales-tips. So here's the next one. This is again from an operational engineer at a large cap E&P company. Bring data. Bring a salesy pamphlet and a branded Yeti cup along to expecting to work will not work anymore. If you land a meeting, show up prepared. Everyone hates death by PowerPoint, so keep it short. But everyone will love an appendix with 30 backup slides that only come up out in response to specific questions. And so there it is, and you can get all of those. We'll hit them one by one. I think we got looking here 1, 2, 3, 4 more to do. So 4 more to do, but we're gonna leave them up on the website. So if you're curious what it feels like from the other side table, and that was one of the more fascinating conversations we had, Josh, was on that. I know we have a guest coming on in a minute, but I'll kind of reiterate again. One of the things that was said in that meeting was talking about the bidding process, and I think we told the story on here, but it's worth repeating. That this particular person was saying that they get bids in and they're not done, they're way overpriced, or they're not. They don't actually address the things that are inside the bid, and so they were talking about why, how frustrating that is from their standpoint, and so I can understand that. And one of the things I kind of push back on, I said, well, from our side is that we get bids all the time, and we're not sure they're actually bids. We're not sure if we're actually going to put together a bid that's going to be looked at and evaluated and held to a standard, or if it's just a pricing mechanism to make sure that they're keeping their current vendor honest or whatever. And so, it was a good conversation and learned a lot and heard from that side of the table that you don't get to hear very often. I would just say that, if it's possible, if you're on the E&P side or the midstream side, and you can sit down with the vendors and have those type of conversations, that's really helpful understanding some of their frustrations that he was expressing that day. And then from our side, there are certain things that they didn't realize that we were expressing. This is why, we can't speak to, we weren't involved with any of the, we didn't work for this company or anything, so we weren't involved with any of the situations, but we're just kind of saying, well, this is possible, this is possible. And it was kind of, I think, helpful from that side of the table to hear this is why vendors act the way they do, potentially in some scenarios. And because, if you're over there at, Chesapeake, we'll pick on Chesapeake because they're struggling. But if you work at Chesapeake, you're not concerned with, what your competitors are doing. You're concerned with what you're doing. And so you're not thinking about maybe the vendor who has to serve, 4 or 5 masters. So those are conversations that we think that probably should happen if possible. So if you're on that side of the table, folks, you're on the company man side, then be sure to sit down with your vendors, tell them the problems that you're having, not necessarily with them, but with
we're making fun of the market because it's
in general, as far as bringing in new vendors and going through that process.
Trading who legitimately
awesome.
Are concerned.
Well, we got one last thing for the roundup. This
but
is
then there's probably a large portion who look at this and the dollars and cents deal go.
ExxonMobil aims to keep dominant status in Texas shale, so XTO filed for 15
all of these things, when you think about it, there are
for 15 horizontal wells in the Permian basin.
Not,
and then once again, he's got the Barnett
like when we talk about
in
these
here.
things,
Again, pointing out that there are no horizontal drill permits.
Sergio, you should just be honest at some point and say, Ryan, your shale sucks, Brian, and it's all your fault.
Probably
wow.
That would be much more straightforward.
That's aggressive. That's aggressive.
Much manlier of you.
That's aggressive. That's well. I mean, it's like, do people need to know that there's no update in the Barnett Shale?
Might include a
why don't you just take that out? And then people will start asking. And then maybe, but we don't need you to pile on every week. We get, it's a little bit redundant when you're just piling on us about it. And listen, we know the gas is cheap, man. So I don't think Sergio offered to come cover the polar plunge. That's real news of the Barnett.
Go ahead.
If you want to talk about news of the Barnett,
because I had an interesting conversation with someone about this.
So there you go, Sergio.
Number one most attended oil and gas polar plunge of January 2020 is happening in the Barnett. What more do you want from us, Sergio?
Speaking of that, Josh, while we're waiting on guests, we have a few folks to thank. So we've been getting in some numbers here. About where we kind of fit into the larger podcast world. And so we got some folks around the world that listen to the show. So let's just give them a shout out. So Australia, Canada, the UK and Northern Ireland, Russia, Sweden, and I think we have a few other countries. Let me see if I can. Japan was one. Finland, I believe, was one. Trying to pull it all up here. So anyways, so folks from around the world who listen to this show, we do appreciate it. It is kind of interesting for us what value that we're bringing to you. So we'd love for you to reach out and tell us. And then, and a side note, Ellen's show and our Energy Week is the #1 rated show in Kazakhstan. So
yeah, I saw that.
So there we go. So we are. I don't know if they listen to this show or not, but they do.
Hello to our friends in Kazakhstan.
Hello to our friends in Kazakhstan. So
environmental projects and
all right, today we have a guest, Tommy Wetegrove. He's an experienced second-generation landman and founder of Mineral People, LLC. He's got a working interest partner in some oil and gas wells as well. So, Tommy, we've been looking forward to get you on for some time. Glad to finally have you on today, man.
Thank you. I'm glad to be here.
So, Tommy, we were a couple things we wanted to talk about. As a landman, you have an interesting perspective on the industry and how it's developed over, say, the last 10 years or so. And so, I was interested to get you on, talk about a couple of things in different areas, different shale plays, and just kind of get some perspective that you have on where the industry has been for the last 10, 15 years, where it's at now, and where you think it's going. So
this is our source.
So so just wanted to kind of kick things off and give us kind of a little background about you, and we'll jump into it.
It's not that much money.
All right. Well,
it's pathetic how little.
So we're seeing kind of an interesting time, and I wanted to start off. Let's look back a few years to the plays that we have seen in Texas. We had the Barnett, the Eagle Ford, and the Haynesville as well. In the northern part. And what we've seen is.
Is this an
you kind of have, voters? I don't know what I would, in my opinion, you have a repeat of kind of the same thing.
And other people might be like,
I'm not saying all the plays are the same. I'm saying that, you see some of the same trends that start out throughout different plays. And I think there's a reason, obviously, for that. So let's back up. Let's start out. Okay, I'll just start out, in the Barnett. You saw that big giant Barnett boom, years ago, I guess, when I was real active in it, it was, I want to say, I was there, did a lot of work in that area from 2005 to about 2009. And, at that time,
some of your workforce, if you do get,
it was booming. When I'll never forget getting to Fort Worth and seeing just rigs just running. I mean, you could see them everywhere, all over around the city limit. It was just really booming. And I remember that's one of the first times I had seen, as probably a lot of people, because that was also kind of a unique play in the sense that you had, drilling occurring like within the city limits. And it was kind of the first time deal, and there was a lot of also
varying degrees.
Entries and barriers, I guess, so to speak. I remember there were some lawsuits, and there was some legislation about drilling within city limits, and I know there was some issues with it. I know it caused some a lot of legal problems, and I know that it got kind of ugly in certain areas as far as that goes. But anyway,
I don't know.
So,
but anyway, I thought that
one of the things I remember experiencing there was, give you an example. I mean,
to be fair,
about how lease bonuses got so high so fast.
Don't worry, it's not.
And
you were probably in step.
How no one could. It was almost like you couldn't keep up with them. Example,
okay, so we went to that podcast.
When I guess you can say this now because it's no longer here nor there. But at the time, I remember the first lease I ever purchased there. I paid $600 an acre.
I found it interesting.
That's what the client was paying. Within,
if you're going to lose a vote to a non-vote, that's
not even 2 months.
Not even turning them. You're just
that
losing them to a non-vote.
That's had jumped up to like $3,000 an acre, and then obviously it went up much from there. I don't remember exactly what the dollars were as far as when I exited the play, but I remember thinking it was up $25,000 an acre and higher.
It feels like we talked about
so you see the increases. Are just phenomenal.
What are we going to talk about after this election's over?
That being said,
if Trump loses,
what
he's not going
also
to run again.
started to happen is
if he
when
wins,
you would drill wells there around the same time, I want to say the cost.
I don't know.
I remember kind of doing some research and being involved in some of the the AFEs that I saw. A well to be drilled and completed, I guess, in the earlier stages was the AFEs that I was privy to was about $2 to $2.5 million. Once that obviously changed, your drilling costs almost started creeping up, just like your lease bonuses. And so, it caused some issues for the play as it was developed. That being said, let's move to the Eagle Ford. Same thing. The play starts off, it's booming. Everybody's trying to get leasehold. Prices are soaring. Very similar to the Barnett in the fact that it jumps, 3 times. The bonus prices jump 3 or 4 times in a matter of months because companies are trying to compete for acreage and they just keep raising the ante a little bit. And so it starts out again. You have this phenomenal increase in lease bonus, and therefore, I'm not saying that this causes the higher drilling costs, but you see the same thing as more drilling starts happening. Your wells become more expensive. Your drilling costs start to go up and they start to increase. And so what does that do to the overall scheme of the play itself? You've got to raise more money. You've got to spend more money. And it creates this little bubble of cost, and therefore, what do you do? And I think that is
making his first
some of, as we've seen,
the new
these
year,
plays
Dr. Dean Foreman,
start
American Petroleum Institute.
so,
Dr. Foreman, how's it going,
hot.
sir?
Everybody wants to be there, and everybody's buying acreage and starting to drill wells. And then you have
we were just
this,
breaking down
once
the
everything starts to get so high, the bubble kind of bursts in a way. And then you see, like, today,
so we were talking about that,
some of those plays are, people are still drilling wells there.
So
they're not near the amount of hype and that's maybe a wrong term, but, you don't have everyone running out to jump into the Barnett Shale or Eagle Ford Shale right now, like you did when the plays were just, really hot.
Two things.
You still have some operators who drill wells there, and they're still productive, and there's still some good zones there, but you're not seeing the
December highlights demand. U.S. petroleum demand in December,
I would guess,
slowed
of those plays like you did.
For 2019,
and
kind of go through
I think that,
there. So,
in my opinion, a lot of things causes that. Obviously, I talked a little bit about the drilling costs and lease bonus costs, how they get incrementally higher and higher and higher. And that also starts to create, a barrier to enter those plays. Where you're only going to see people with bigger dollars. It's going to push out some of those smaller, middle range independents because they realize they can't afford to buy those leases at that price, and they can't afford to drill wells at that price. So, that you kind of look at, I'll use the Eagle Ford, a lot of smaller operators end up selling out to bigger operators. Number one, it's probably because I'm sure they're offered, a very good amount of money for their acreage. but also it's because I think in certain cases, especially some of the smaller ones, it's because they can no longer operate at that level with that kind of, cash being just filtered into those wells and the development. So you have to take on a partner or sell out to a larger company that can afford to drill wells like that. So I think that, and obviously, with the Barnett and the Eagle Ford, you saw, I wanted to touch on this too, commodity prices, of course, change as time goes on. Case in point, 2014, oil dropped from, I don't have the exact numbers in front of me, but I know it almost dropped like by half. It was over $100 a barrel within a month to 2 months. I want to say it was, it's $60, $50. That obviously caused an extreme, I would say almost panic. People started getting laid off. Companies started just trying to, make ends meet, because when your commodity price drops almost half in a series of months, that's quite a difference in your revenue stream. So, and you have to really look at your drilling operations much closer at that point.
Yeah, I'm a little curious about in the Eagle Ford and Haynesville and the Barnett, if they were having some of the parent-child well issues. I know that might not be your area, but you mentioned the decline rates. And I just wonder, the cost of drilling these wells went up. I wonder if production began to decline as well, along with all the other tumultuous events that were going on. Because it's definitely a big thing right now in the Permian. The parent-child well, I think, is one of the key issues for a lot of these E&P companies.
It really is a good story for continued production.
Yes, I would agree with you there. I'm not sure if you saw it as much as you're seing it in the Permian, but it definitely, I would agree, is a factor in some of the production that I have seen. You do have that, definitely, that parent-child
child that we talk
issue.
About on a regular basis. And 14 consecutive months. That's a long streak. How does that compare to maybe other
how many
historical
parents
streaks
can
that
you
we've
really
seen?
drill?
Is this kind of a record long streak, or
is
this
to your
normal
point,
to kind of see this accumulation over that
So
period
I think that that definitely causes a problem. And as much as you want those children wells to be as good as the parents, they are not. And I think that how do you, so I guess the question is, like you're saying, and kind of maybe moving forward and go into the Permian and some of these other plays, is you figure out a way where you can, technology-wise or, some other way, you have to figure out how to make those wells produce closer to the parent well.
To put this in perspective,
one of the things you mentioned earlier was cost to get into the plays, and if you worked at the Barnett or the Haynesville back in their heyday, obviously, some of the numbers that you mentioned and you would have heard back then were just crazy and astronomical. But it's been a while since the heyday, and Sergio Champa seems to repeatedly, weekly, pound on the poor old Barnett about how no one's drilling here. Obviously, prices aren't very good here, for natural gas plays like the Barnett or the Haynesville. But it doesn't mean that it's never coming back, obviously, but it also doesn't mean it's coming back soon. The prices aren't in the favor. But what are you hearing, just from a standpoint of folks who are maybe wanting to sell their position or looking to raise capital in the Barnett play or the Haynesville play? How much interest or how much this kind of scuttlebutt is around those two areas specifically?
Really relate it directly to iron.
I have heard that the Barnett, there are some companies that are trying to, some small E&P companies. Well, and let me kind of back up a little bit. I know if you look at I would say northeastern part of the Barnett, which you would call the oilier part, EOG was very successful in drilling some very good oil wells in that area, and some other operators as well. So you do have, they found the oil window of the Barnett. And so, that's definitely helped. But also you're seeing some companies that are able to, because prices are now, at a normal level perhaps, and they're not have to pay so much, they're still able to drill some wells that they can, operate and make some revenue on. It's just, you're not hearing as much about it, I guess, to your point, because it's not the hottest thing there is, and no one's really talking about it. But I feel that, and I have heard there are some small operators that are still able to drill some wells in the Barnett and in the Haynesville and they're still able to make some money because their costs have come down, so much to get into the area, and maybe even rework some of those existing wells. And I have heard that I forget where it was. There was actually an article I saw a few days ago about they were talking about re-entry of wells, and they specifically listed the Barnett, and they feel that at some point a lot of those wells will be re-entered, and that it will be a very lucrative situation for somebody, because it's not going to take much stimulation to bring those wells back on, really get them to flow like they did in the original, where some of those wells are flowing, from what I remember, 10 to 20 million cubic feet a day.
U.S., you just couldn't step up and deliver this.
In the Permian, we saw 2016, 2017, a lot of private equity money began to enter into the space, and lots of startups, smaller companies that were looking to go in, get up acreage, establish some rigs and wells, and then flip. That caused the market to kind of go in a certain direction. Now we're seeing the market no longer operating under those principles. That flip and sell model is basically dead. So there's been lots of changes over the last 2 to 3 years. What are your thoughts on the Permian? And you saw it boom like the other ones. You saw the prices begin to increase, and then you saw smaller players not being able to thrive. But in this case, you have a lot of PE-backed companies that are also unable to sell, and many, I question whether they can operate efficiently in between now and when they actually sell. So if they don't sell, they have to figure out how to operate at a certain level without going bankrupt. They have to increase their efficiencies, keep their production levels steady, and I don't know that many of them were really built for that.
And here we are, as of December, having seen a surge.
You're absolutely correct. From what I know and what I hear and what I have seen is they are having to figure out how to drill more efficient wells, because they have no option. Like you said, they put a lot of money into their positions. Now they realize that they have to do something with it, because, like you said, they cannot exit, or maybe their exit strategy did not work as they thought it would. And so now they have no choice but to develop it.
Coal mining,
and so I think you're going to see some really good innovation come out of that.
What's the next?
Because they're going to, they realize they have an asset, and now they have to figure out the best way to produce it, not just exit and sell out, like you said, and just sell their position and get their money back and move forward. That being said, I think where the Permian is I guess the easiest way I would describe it is the honeymoon period is over. Everyone was wanting to come to the dance, and now everyone's in the dance, or at the dance, let's say, and they are, realizing that now we're going to have to do something. And once again, I would say that what's going to solve those issues, let me kind of back up. Case in point is, I read an article about, I believe it was in the Houston Chronicle. Sorry, I don't know the date, but it was recent, probably in the next, within the last week, about the amount of gas coming out of the Permian Basin. And that, for example, some of the areas are much gassier than they thought. And at this point, there being no market, they're having to flare it, and they're having to figure out, there's no infrastructure to get it out, to sell it, even to sell it. And so it's become an issue. And so I think that basically is going to force these operators to figure out a way to use the gas, or do something else with it other than nobody wants to just keep flaring gas. And also there's a lot of environmental issues around that, about the pollutants and so forth. And I've heard a lot about that a lot of people are very unhappy, and there's a lot of I guess combating flaring gas and drilling wells because of the pollution that's involved.
Because it's not in the letter of this phase one trade deal. Here's
so
the question.
When you look at kind of where we're at with things, the market is, at least if you look at today, everyone's kind of concerned about the virus, and it seems to respond to a lot of things other than
fundamentals. Fundamentals obviously are part of it, but it seems right now, last year, the narrative was, well, the trade deal with China, fear of economic growth. Now we're seeing the virus and how many barrels that we take off the market. And that obviously does play into what happens at the more transactional level.
Hopefully, maybe we'll see how those talks go, and maybe next year.
Someone who's kind of seen these things come and go, the rise of the Permian, the rise of the Haynesville, the fall of Haynesville. Now we're the Permian's kind of the thing. How much do you think the news impacts folks that are in the mineral space and they're wanting to move to, they're wanting to get in or get out? Do you think that they're following the kind of the world news, if you will, to kind of make sure that if it's time to get in, or are they more kind of following fundamentals to decide when they want to enter and when they want to exit the market?
And hopefully,
I think you have, at this point, I think that only,
but you are right, there's a lot of problems.
As I would say, the honeymoon period's over. I think you're seeing
it would be more efficient, but to get there actually takes. There's so many problems to get it done the new way.
Where the more, I guess,
to do that as
for lack of a better term, savvy
kind of the,
people that are in the Barnett.
The devil right now. Then
the Permian.
Doing this, but then there's a lot of problems.
They're the ones that are going to stay and they're going to thrive.
Clear on the tone, though.
I do believe that.
It's a great
in my
problem.
opinion, the ones that show up too late are going to have a very hard time, and that maybe are following news that is, like you said, just thrown out there, and it's not really. I'm not saying that it's, I'm not talking about fake news, to be clear here, nothing like that, but, I think you really need to look at it from the industry's perspective,
they go, well, why don't they just figure out
from what
something
you
new?
hear about, the sky is falling necessarily,
we're going to do this.
I'm not a financial analyst by any means, but I think that definitely when you see some of these negative headlines about the Permian's going away, everything's gone, the oil prices are falling.
That's part of the
a lot of
reason
these companies
why
are, people aren't wanting to put,
haven't been taken.
people are worried about their investment.
But I just thought that
some
was
of these
worth
companies, that are they going to be able to withstand the downside? And I guess that being said is, I don't think there's any reason to panic. I think that, of course, prices are not so good, and it's a tough time in the industry for a lot of companies and a lot of people. But that being said, I want to kind of move towards, future, and I wanted to, there's an article, and I do have the date and the actual, title for this one. This is out of the Houston Chronicle. It's dated January 20th, 2020, and the title is Parsley Energy Doubles Down on Permian Basin. And so basically the article kind of summarized, it basically just says, they purchased Jagged Peak Energy, and that, they're going to be spending quite a bit of money to develop this position, and that even with the lower prices, they're going to be able to produce.
So let me ask you
and drill
this
wells
question.
In the Permian.
Last year I kind of joked about the 5-year range.
Cites, some other
now that we're
companies
through the
some
year, I'm
of these
looking
other
at some of the charts and the
that,
if you look back historically to last year, we're
Endeavor
outside the 5-year
is going
range
to drill some wells in Martin and Midland
if you just
County.
look at that, you go, oh wow, we're outside the 5-year range.
That some other wells are going to be drilled in the Eagle Ford.
That 5th year is gone, and that's not part of the 5-year range, which means as we look at data moving forward,
maybe that's not the right term,
for the last 5 years, which would be 2019 moving back, the 5-year range looks different, and how we perceive those charts will be different. Does that have,
innovation
as an economist, does that have any impact on how people will feel about the market? Because
and I think
you had the line,
it'll be interesting to see that going forward. That being said,
well outside the 5-year range, and now you're just going to be substantially closer, or maybe inside the 5-year range. How do the markets or people who look at this and they look at those kind of numbers, is there anything we should consider moving forward? Because for a simpleton like me, I just see red lines. I'm like, oh, okay, colors. But for the smarter folks who actually analyze this stuff, what does that impact? What might that have?
And that they purchased BHP Bilton. And they basically, with this, acquisition, they're going to really ramp up their drilling over the next 5 years. And so even with the prices being what they are. So I think that necessarily the sky is not falling. It's just a matter of going forward with those, those things of the innovation, the tenacity, and that we will, as an industry, there will be some hard times, but I think in the end, you'll see what you've seen before through those things. And then I want to, in that article about where it talks about BP,
it will be, you're right, month over month as we
one of the
update those 5-year ranges historically and see a different comparison.
I'm sorry, I was looking for the name of the person that I don't want to quote them, but anyway, he says, I believe his last name is Burton. He's the CEO, or sorry, my notes here. In this article, I'm not seeing his first name, but anyway, the quote is this. This is his quote. This is not mine. He says that they're looking for people that demonstrate value, that are key to the future.
But yeah, and I guess I'm looking at
and what that is innovation, motivation, trust,
okay,
and
well, maybe we're
teamwork.
breaking a record, maybe we're
And
not.
I think you're really going to start to see that more and more.
We're right outside
with
the
these
5
companies
years.
that are trying to, and they will
last
develop
year, it seemed like
the
everything
Permian
was,
as they
we're
go
kind of
forward.
blowing the wall off of the
Well, it
top
reminds me of
the way the
Exxon. I saw some
visualization
some
was.
news
It really
out.
felt
I say news.
orders
I
of
heard
magnitude
somebody
larger. Well, this year
speaking
it'd
of something
either
I was
be
at
right outside the
recently.
range or right above it.
And they mentioned
people
that
might
Exxon planning to go up to 70
data,
rigs in the
probably a little
Permian.
bit different, I would guess.
And they have a pipeline from Wink to Webster.
Red, green, colors,
and
boxes.
they
That's just
have
for us simpletons over in
either
Texas.
have
That's how
finished
we
building
look at
or in the
things.
process of building a refinery that's capable of taking
You're right, and I think
the crude that's being produced in the Permian and refine it, because there are limitations on refineries here in the states that can handle that sort of crude. So you got people like Exxon that are kind of building an end-to-end solution. They're using stuff like cube developments to increase efficiencies. They have it from upstream all the way downstream. So they have the ability to really watch their margins in a way that's pretty unique. And companies like that, I mean, they're going to be fine. I mean, they can handle it. The smaller companies, not so sure. With prices where they are or any lower, probably will have a much harder time, at least in the Permian. Now, you move other places, there may be other opportunities, which is something we've always said that the Permian's not for everyone, especially as it gets more and more competitive.
Ellen, do you have anything? If not, I have a duck question.
Oh, I wanted to ask you, one of the interesting things you talked about gasoline.
Well, with that, Tommy, I think that wraps us up for today, man. Is anything else for you want to hit on? Tell us who you are. If anybody wants to get in contact with you, where can they find you?
What those regional divergences look like?
Oh, sure. My office, out of Dallas, Texas, is where I reside. Energy Square.
Urban areas
And my email address is tommy@mineralpeople.com. I'm also on LinkedIn for anyone wants to find me. Just Tommy Wetegrove. Should be easy to find.
3 million barrels.
And I'm always trying to really be kind of more energy based. I do
We look at both
various things, primarily land work, but also Mineral People was formed to market and acquire minerals throughout the state of Texas. So we help companies try and locate minerals. We help them try to sell minerals and or buy minerals, and we buy some as well. So anyway, I really thank y'all for having me on the show. I enjoyed it.
Awesome, man. Well, appreciate you coming on.
Thanks for coming on, bud.
and actually increase.
Well, thanks again to Tommy for coming on the show today. Really appreciate him coming on. With that, Ryan, I think that wraps us up, man. We just gotta go freeze Friday.
Yeah, gonna go freeze Friday. So that's it. Thanks, listeners, for tuning in. And if you do get to 300 5-star reviews by Friday, Josh and I will sit back with a nice cold beverage and watch Nate go in. But other than that, we will be in the lake Granbury Friday. Next time,
I'll let you go. One final thing to consider before your next appearance. We found out that we are the #1 podcast in Kazakhstan. So before your next appearance, if you could bring us some good numbers for those people, they would probably appreciate it. So just throwing that out there. If you have some good import-export numbers for Kazakhstan before your next appearance, that would be spectacular. I think they're going to make Ellen and I like president for a day or something. They haven't said that officially, but I'm just kind of reading between the lines there. So just something to consider.
We're totally expecting celebrity status in Kazakhstan.
Yes, that's what we're hoping for. So.
Well, congratulations. I'm kind of reminded of that 1980s song, Big in Japan.
Can we make that our theme song now? the outgoing music.
Yeah. So for next month, if you could have a little Kazakhstan tidbit for those folks, that would be much appreciated. If not, that's fine too. But just we're trying to be people of the people. So, Dr. Foreman, anything we missed or anything before now and next month that you might be attending or doing that you want to tell folks about?
It's just been a really busy start to the year. So I spoke at the SAE industry government meetings, and this was attached to the Washington Auto Show. So really interesting things looking at electric vehicles, the energy transition. I'll be speaking come Wednesday at the American Institute of Iron and Steel. So a lot of trade associations coming up. The Argus Crude Oil Summit on February 5th in Houston. So making the circuit round.
Oh, cool. Well, good deal. Good deal. And folks can connect with you on LinkedIn, I'm sure, and see where you are all at. And I think you're on Twitter as well. So we'll link to that. Dr. Foreman, it was good to have you on, and we will talk to you again next month.
Excellent.
See you later.
Ryan, thanks so much.
So good to have you on, sir.
Thank you, sir.
Thank you.
Much.
So
how are y'all doing?
Good.
Good.
So real quick, this is off the record. I'm in talks with some Chinese and American groups about building an LNG plant in Baja. And so we're looking at,
Awesome.
And so it's very, very, very early, but through some of the Chinese folks, there's a Chinese Mexico fund that has like $2 billion in it, and they're interested. And so I know some folks who have looked at the power issues in the Baja, and they know the governor down there. So I just happen to know so we'll very early on, but nothing to talk about. But just kind of dealing with all the parties involved, it's you can see why these things don't get done very often, because they are very they're a big pain in the butt to do, to put it mildly. So I will.
So I was thinking we should include a little Kazakhstan-related news.
Okay, yeah,
at the end for our favorite Kazakhstani listeners.
Let's see if he'll give us. Yeah.
So we should talk about the fact that Kazakhstan has halted the sale of contaminated crude oil to China. It was contaminated with organic chloride, and in order to prevent major contamination disaster like we saw happen, with crude from Russia, the Kazakhstan, halted deliveries, and I think that they probably saved China a lot of money and issues here. So kudos to them for getting on top of this early.
Yeah, and do you have like a little thumb analogy or pinky toe that you use to describe where Kazakhstan is? Because
like the banana and the thumb and Central Asia.
It's like in the center of Asia, basically. Like It borders, China and Russia, and it's just right there.
So fun fact, Kazakhstan used to be an Soviet Socialist Republic, so it was part of the Soviet Union. And now it is, of course, its own republic and has its own oil industry. And I can also tell you that there was a Kazakhstani figure skater who won, I think, a medal at the World Championships last year. So go Kazakhstani figure skating.
And it is the northernmost of all the Stan countries as well. So there you go. There we go. So Kazakhstan, we love you. Send cash, gift cards, plane trips, whatever. Well, we love you guys. So anyways.
Download our podcast.
We're number one, so just keep it up.
Keep it up.
Tell all the surrounding Stan countries as well. That'd be nice. Pakistan. If we were number one in Pakistan, that'd be nice.
That would be huge.
That'd be huge.
Azerbaijan, not a Stan country. Turkmenistan.
Turkmenistan, Uzbekistan, Afghanistan.
They're just to the south there.
Yeah. So, Ellen, where will you be this week? Not Kazakhstan.
Let's see. Not Kazakhstan. Unfortunately, I would love to travel there, but I will not be there. I will be on Forbes. I will be on investing.com, and I may be in the Washington Post. We'll see how that goes. So.
Will you be talking about how you have 4 degrees and that makes you the expert on something?
No, I will not. I will be talking about, I will probably be writing about whether Saudi Arabia is really an ally of the United States and where this kind of myth of Saudi Arabia and the U.S.'s so-called intimate relationship came from.
Okay. 30-second rant, Washington Post. If you hear something you don't like and you call a guy who has 4 degrees and you get his opinion and it refutes the other opinion, that actually doesn't mean anything. I know that you journalists don't understand that, but that actually doesn't mean a single thing. It means you have 2 people who disagree, one of them has 4 degrees.
It means someone who spent a lot of time in school, wasted a lot of money, or got a lot of scholarships, and probably made some poor life choices. I mean, I honestly don't consider having. Okay, I guess I have 3 degrees, and I'm not considering the fact that I have these 3 degrees an example of something that one should do. I would not necessarily recommend that as a good life choice. So, and it definitely doesn't mean I'm smarter. It just means that I didn't want to go in the real world.
Well,
just stay in the ivory tower.
It was just funny because it was an economics debate, and it's like, well, we contacted an economist with 4 degrees. I'm like, you do realize there's multiple types of economists with multiple theories about how the economy works. You probably don't. You probably actually don't realize that. So Washington Post, get it together. I'm a subscriber. Don't make me mad at you. So Ellen, you're at least smarter than me. You have that going. The bar is not very high, but you have that for today and more. 3 times the degrees I have. So there you go. You've got me on all fronts. I will.
But like I said, that doesn't mean much.
I will share in the glory of being number one in Kazakhstan with you, though. We will split that equally. Everything else you can have. Ellen, it was good to get back. Be back next week, right? Yeah, back on normal schedule. So be back next week. Thanks, Dr. Foreman. And listeners, thank you. And until next time, we'll talk. I forgot how to close the show out. So bye. How about that?
Until next week, listeners.
Bye.
All right. All right, Miss Wald.